Okay, Ashwini Agarwal joins us now. Let's connect with him and let's say hello to him to understand what his market and market take is. Ashwini, good morning. Thank you for joining us.
Morning, Nikunj.
Ashwini, there seems to be a sudden pause, or I would say the feeling of uneasy calm in the market. Do you think we've hit a peak for next couple of months, not days and weeks?
Yeah, I think so. I think, Nikunj, the way I would describe the market is that it's not too hot, not too cold. I definitely don't see the room for the market to take out the previous or recent highs. Downside is probably limited to another 5% on Nifty at worst, because the domestic investment sentiment is still pretty strong. Notwithstanding the news flow from overseas, including high interest rates as well as what's going on in the Middle East. So for the domestic sentiment to break, you will need a lot more negative news or some sort of a shock that is unanticipated as of now, or a significant worsening of what's going on in the Middle East. And at the same time, on the upside, you don't really have the support from foreign portfolio investment flows to take out the recent highs. And the IPO activity has picked up a lot as well. So that's kind of putting some pressure in terms of where the funds can go. So if you take all of this into account, my sense is that the domestic sentiment will not allow the market to sink a lot unless the domestic sentiment caves in for some reason. And there's not much room for upside either.
Ashwini, everybody is saying that be overweight on India. India is the place where you want to be and you want to invest more. But if I look at the FI selling, it's at a record high. The FNO positioning, again, record shots. So why are our fair feather friends who've always been India, who've backed us during tough times, suddenly taking such a stepmotherly treatment when the India appeal is perhaps the best in the world?
So, Nikunj, I'm going to be guessing here, right? So there are a couple of things. One is when global economic environment is looking extremely fragile. There is a tendency for investors to exhibit home bias. So if you have large funds, which are stationed out of the United States and across the board, emerging markets as an asset category has been losing its relevance because all the large emerging markets are kind of, fallen one by one. In that context, I think that, increase in home bias is somewhat palpable. The second thing is that, when you look at foreign portfolio inflows, you have to look at, there are different types and different categories of investors. So you have sovereigns, which is long-term stable capital. You have long-only, India-only funds, which is also a relatively stable pool of capital. And then you have asset allocators and global funds. So, and then finally, you have the proprietary desks and hedge funds. So it's the last two categories or three categories where the fund flows tend to be a little volatile, and they tend to take a look at short-term, outlook and trade accordingly. So, the FI numbers being volatile is a function of, these several types of players. And I would say that there are pools of capital within the foreign portfolio inflows that are not necessarily driven by long-term economic outlook.
Interesting. Ashwini, hi, morning. So what's the best way to make or rather benefit from this domestic risk appetite, which will hopefully keep India afloat?
So, it's bottom up. Okay, I know it's a often repeated phase and it's probably beaten to death, but I would say that the correction that we've seen in the last month or so has seen several stocks give up nearly 15-20%. Also, there are bargains available where sudden sentiment change has resulted in short-term price movement. So I think those are the places to look. I continue to be reasonably positive on financials and pharmaceuticals in particular. And for those exporters that got punished because of high raw material prices as well as high transportation costs. So all of those abnormalities which resulted from COVID are now firmly behind us. So, where you find a combination of fundamentals plus some price correction, I think bottom-up investing is the only way to go. I think, my initial comments to Nikunj are more pertaining to the Nifty, where one doesn't see a lot of downside, one doesn't see a lot of upside. But I think on individual stock basis, there will still be opportunities that one can benefit from, especially if the price action has been negative and the fundamentals are intact.
But since we can't talk individual stocks, thematically,
That's
does
right.
it seem like, it's the usual suspects, IT, chemicals, etc., where you do see value, some of the underperforming banks?
Not so much IT, to be honest, because I think IT, I'm getting very confusing signals. I mean, net hiring is down for the first time in 25 years. There's a lot of stuff going on there. So there are individual companies there that might be an opportunity, but I think on a more macro basis, I wouldn't want to invest into IT right now. I've been waiting for IT literally for 6 months, watching every quarter. And every quarter I heave a sigh of relief once the quarter is over that I didn't buy. IT I would like to stay out of. Chemicals, there are different players. There are upstream and there are downstream. The upstream players, I think, will continue to face pressure because they benefited a lot during the COVID period because of very high prices for basic products and intermediate products. And I think the downstream chemicals that kind of buy base chemicals or buy intermediates to make finished formulations, those are the ones that suffered over the last 2 years, and that's where an opportunity is there. So I think chemicals is also, I would say, I would look at company specific and where we see raw material costs easing off. That's where an opportunity might lie. In financials, yes, financials I think look very interesting, and I would still be stock specific, but I think here there's an opportunity to buy both the large caps as well as the mid caps selectively.
Ashwini, hi, morning. Earlier we were just talking about how the earnings season, is, despite all that's going on, has comparatively been pretty strong across the board. A lot of reports are indicating that profit growth has been witnessed, and this is across sectors. What do you believe this is indicative of, and how are you looking at the overall earnings season transpiring over the next coming quarters? Will the resilience, especially into the festive season, etc., continue?
So my thoughts are that the earnings season has multiple drivers to it this time around. On one hand, you have softening raw material prices and softening transportation costs feeding into the margins. On the other, you have financials which are benefiting a lot from low credit costs. Those are two broad themes. There is some revival in consumer demand, but consumers are witnessing a continuation of the K-shaped recovery that we saw during COVID. So urban demand, especially the high-end urban demand, is doing extremely well. I think on the rural side or semi-urban side, I don't think there is that much recovery. Going forward over the next 2 quarters, I do think that softer outlook for global growth will feed through to India via exports. So I don't think we can sit back and relax in terms of earnings outlook. And I think some of the base effects will also fade away. Base effects in the sense that lower credit costs for the banks or lower raw material and transportation costs for some of the downstream chemical companies that I spoke about earlier. Some of those base effects will fade away. So my sense is that over the next 2 quarters, I would expect slightly slower economic growth and slightly slower earnings growth. Mind you, overall corporate health, financially speaking, is still very strong. There's not much leverage in the system. Government expenditure continues to be very strong. There are signs of corporate capex picking up. So all of that is there. But I think on a sequential basis, you will see some slowdown over the next couple of quarters.
Well, Ashwini, season's greetings. Really appreciate your time, and certainly hope to see much more of you going forward. Thank you for joining us.
Thank you, Nikunj.